interesting about today, we do have an announcement from the president they're going to sign the China trade deal, but it's not moving the markets at all. A sign that we've already got that trade deal already priced into the markets here. Banks have had a good quarter overall, fractionally on the upside. Consumer staples unchanged. VanEck, the semiconductor SMH, has been the star of the year. My bet for the #1 ETF of the year. Energy, good run here in the last month or so. Flat today, and retail up about 3% on the month, down a little bit today here. Important thing is, are we bottoming on the global economy? You want to watch these manufacturing numbers that we've had recently. So we had overnight, last night, we had the China manufacturing numbers for December, about in line, but only about 50. That's break even. It's not showing any improvement. It's just flattening out. And the question is this good enough for 2020? Can we move the markets forward on that? Japan retail sales, industrial production, end of last week was a disappointment here. So now we're going to get the Eurozone PMI, and we'll get the U.S. ISM manufacturing numbers. China's had a great year, by the way, up 22%. Let me just show you what we're doing on the global markets. You had to have a really hard time losing money in the global equity markets this year. I call it the year of 20%. Everything up 20%, not just the S&P. Equal weight. Now, everybody complains only 5 stocks, 10 stocks are moving the S&P. That's not really true. Equal weight was up 26%. All 500 equal weighted in the United States. The Russell 2000 also having a good year, not quite as good as the S&P, but still up more than 20%. Here's what's really encouraging. Europe's been awful for years. This is a great number overall. This is the broad European markets, and China has underperformed for years as well. So very encouraging that you've got 2 sectors that have been global sectors, international sectors, underperforming for a long time that have done a little bit better overall this year. Let's talk about what's going to happen in 2020. Are we going to be up or down? I don't know, but I play the averages, and I look at the total returns, including the dividend for the S&P 500. I've shown this many times over the years. The last 90 years, the S&P 500, including a dividend year over year, is usually up. It's up 72% of the time. From December 31st, December 31st every year is up 72% of the time, including the dividend, and you should include the dividend, and it's down 28% of the time. And now everybody emails me and says, oh, Bob, we're not going to have another 20% up year. That doesn't happen. Yes, it does happen. In fact, it happens a lot more than anybody likes to acknowledge. If you take a look here, you can see we're up about 20% of the time or more, 36% of the time, more than 1/3. It's the largest categories up 20% or more in the S&P. And again, this is 90 years of data, and it's including the dividend here. 10 to 20% advance, 21% of the time. Add this up, 57% of the time, the S&P is up more than 10% year over year. Then take a look here, 0 to 10, 15. How about decline? Only 28% of the time is it down. Now, here's a 20-year chart of the S&P, and the naysayers always said, oh, Bob, what about 2000? Yes. The years 2000 here were terrible. We ended up down, actually, in 2009 compared to the end of 1999. That was a bit of an anomaly, and you can get periods when market underperforms. So nobody's trying to say the market invariably goes up. But over longer periods of time, more than 10 years, 10, 20 years overall, the market tends to increase. And that's why long-term buy and hold strategies are generally the most widely recommended, unless you're really good at picking individual stocks.